Hello, Maverick traders, and welcome out to your currency market recap. This is Ankit here, and let's break down today's market price action. It's a Tuesday, November the 7th. Let's get into it. Let's take a look at how the market's been developing. Let's see how the broad markets are doing, looking at the currency basket, see how those are developing, and then take a look at the possible setups for the next 24 hours. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So starting with the market performance, let's take a look at the news of the day. So you can see the market continues to stay strong. The stock market had a huge week last week. Usually after those big weeks, we look for either consolidation or a little bit pullback. And we are getting actually a little bit more stronger price action, which is showing that the markets are more bullish than bearish. I mean, what a big, huge U-turn that market's taken in the last week or so. On the other hand, we are seeing the US dollar rallying. So that's where the dollar had a big move to the downside last week. So the dollar is sort of retracing back to the upside in the short term. And we had the bond yields, which was, again, being a big story for the last few months. And they're actually pulling back. So interestingly, dollar and the bond yields usually go hand in hand. But we're seeing a bit of an opposite price action. We had the interest rate hike from RBA, which was again expected, so that they raised by 25 basis points. But overall, the Aussie did fall on the news, so we'll get into it when we look at the charts. Now, let's take a look at the percentage change. So percentage change, Aussie again was the big mover to the downside, 0.5%. So again, that came off after their rate hike, which again I think did not follow with a good optimistic or a hawkish sentiment towards in the statement. So that again, usually the price action is priced in, and we just see this selling on the news. So we'll see where the Aussie is going to go from here. And then we had the Kiwi, which again was dragged down a little bit by the Aussie. CAD was a bit of a flat today. The pound was pretty flat. So the real big movement today was in the dollar. And remember, dollar had a huge move last week, down most, breaking some key technical levels. So we're seeing a retracement, and this is exactly what we had discussed in the currency room. We were looking for retracements before we can decide where's the next leg move, higher or lower. We are seeing the Swiss franc gaining. We have the euro gaining. So pretty much all the areas that got hit hard last week are the one that are actually doing better. So that's what we are. We are in this rally formation in some of the currencies where currency with the equity markets are not. So the equity market had a nice little day here, only up 0.28, but like I said, last week it was up about 6% and more than that. So that's a huge sort of an extension that we're getting on the top of that, the big week last week. The crypto markets doing okay. The gold did pull back, which again has been the strongest commodity overall, and we had the oil markets down 4.5% as well. So the oil is coming down really sharply, and that probably would explain why the Canadian dollar is showing a relative weakness, since the oil markets do affect the Canadian dollars. Now, let's take a look at the crypto markets. You can see Bitcoin is doing the best, and the Bitcoin Cash. Remember, we discussed that there's definitely a lot going for the Bitcoin. As far as the news events, we talk about there is talks about the ETF, and that's again really propping up the Bitcoin. But outside of that, you can see that this is not a broader base move in the crypto market. So overall, do like the Bitcoin over among the cryptocurrencies out there. Now let's take a look at the market outlook, because here we are. Let's take a look at the charts. We went from a -3 now to a +2. So let's take a look at where we are. The price action is looking pretty strong, and take a look at the level that we are at right now. This is the previous level of resistance. And you can see after a big week last week, Monday was a bit of a inside day candle, but did close on the top of that candlestick. And here we are getting a bit of an extension here. So at this point, it looks like it's setting up for a breakout. But again, we don't have a confirmation yet. Remember, we always look for confirmation before we can make that determination that it's really out of that range yet or not, but we still have the resistance to go through. But regardless, we have a +2 outlook instead of a -3 outlook. So this is where more risk on versus risk off. Let's take a look at the schedule. So schedule, RBA raised rate by 25 basis points. Again, like I said, it was expected. And the statement probably that was not as hawkish. And then that's where we see Aussie pull back. Now, looking at the next 24 hours, tonight we have the inflation expectation from New Zealand, and that could impact the Kiwi, as we're seeing the inflation not running so hot in the New Zealand, and that could again put some pressure on the currency. Outside of that, tomorrow we have the Fed Chair Powell. Again, it's always marked as red because any comments from him can really move the markets. But let's be honest here. We got the FOMC last week. We already know what happened, so we'll see. I don't have a high expectation for this as a market moving event, but you always want to be on the guard just in case if it does come out or say something different that will move the markets. I think this week is a bit of on the quieter end because next week we have the US CPI. I think that's the big focus. We already have the US jobs report. We already have all that information on hand. So what's really on the docket is that US CPI, and that's really, I think, will be the big focus that will drive the markets higher or lower. But for the rest of the week, you can see some events here and there. But like I said, overall, the market's likely to move with this current sentiment. So let's take a look at currency analysis and see what the velocity scores are telling us. So you can see that in the velocity score, we have the euro, the Swiss franc, and the dollar actually doing well. We have the Kiwi, CAD, and pound showing relative weakness, and Aussie was an outlier as a -2. So remember, that's a velocity score. We still have to check what the trend is telling us because there are certain currencies that were actually breaking out and they're pulling back in the short term. There are certain currencies that were actually breaking out last week and they're pulling back. Remember, this could be just a retracement play. So let's take a look at possible trades based on those recommendations.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
Now, jumping into TradingView, let's just start with the US dollar, because this is where I had a lot of questions. Remember the way we were last week. We had a pretty big down week last week, and we did break below the 20 and the 52 moving average. So what we are seeing is a bit of a retracement. We got above the 50-day moving average here, so prices are getting a little bit better, but we got a bit of a wick today off that candle, and we are still below the 50-day moving average. So the big question is that, is this making a lower low, maybe a lower high, and then a lower low? Well, that's what the setup is setting up as right now, but we still have to look for confirmation. And what confirmation we need? We need another maybe candle up, another failure, maybe close down on the lows of the day, and that probably will set it up. Like I said before, I think the FOMC next week likely to move the dollar. Meanwhile, we might just see the dollar just drift higher to sideways. So the dollar is the big question. It is at a crossroad, but we are not sure yet. Is this a turning point? We talk about how the dollar has been moving up and up and up. So it's been in a pretty strong trend. Now, is this the trend is turning lower? That's a big question. And I think we're still a little early to make a call because the CPI numbers can really change things next week. But that's where we are right now. We are at the crossroads. But if you take a look at relative weakness, I think the yen still looks like a better contender. Here you are on a daily chart. Yen has broken the support, and so far, you can see this looks much weaker. And then we also have the Canadian dollar, which is looking a lot weaker as well. So remember, we always try to pair relative strength versus relative weakness. And I know dollar is what everyone's watching, But we also need to take a look at other currencies that are actually showing a lot more weakness. So Canadian dollar is showing a lot more weakness. As you can see, we have a nice support area over here. So if it needs to break below that, but if it does break below that, then you know there's a next level of support is a little bit far away once we clear out that area. So the Canadian dollar crosses we'll take a look at. We can maybe take a look at yen crosses. On the other hand, what's looking better? Well, euro is holding, which is again a good sign. We had the Swiss franc, we had a massive drop, getting a bit of a bit short term. But you can see euro looks a bit more stable. And we had the British pound, which just trying to break above the 50 moving average. The score is getting a little bit better. Now let's talk about growth currencies, Aussie and Kiwi. You can see that Aussie had a big sort of a pullback. The big question is this buy the dip opportunity, or is this the momentum is over? So you can see that we're catching a nice little bid here off the 50 moving average. So at this point, we can expect this to maybe recover. If it doesn't recover, or maybe it recovers a little bit and turns lower, then we know we have a lower high and Aussie's turning lower. And if it doesn't do that, if it completely reverses a little bit higher, then I do like the Aussie to the upside. And lastly, the Kiwi, which you can see, Kiwi also had a good run as well, and right now it is showing a little bit relative weakness. If you go in the longer term chart, you can see that there's a big long downward trend line. That's exactly where we are stalling. Last time we got above it, but take a look at the price action last time. We did rally quite a bit, pull back, and then that was a good buy the dip opportunity. So question is this a buy the dip opportunity? But based on relative strength of weakness, what's out there? If the market stays strong, I think the CAD and the Aussie will likely get a catch a bid. Pretty similar to what we got last week. But if the dollar is still in the contender, then we might not see the same price action like last week. But if the dollar really starts to turn lower, I think Aussie and Kiwi can really benefit. But for now, we can take a look at other currency pairs. We can take a look at EuroCAD. So Euro is showing a little bit of relative strength. And we can take a look at EuroCAD. You can see this thing is setting up very nicely. It rallied up, pulled back, and we're back at the resistance. So 147.90 is a good level of resistance, which is about 50 pips away. If it breaks that level above, you can see that this can easily get towards that 150 area. So I really like this. It all depends on what time frame you want to pick it on. You can see that on a 4-hour chart, it's setting up nicely. On an hourly chart, it's setting up nicely. I like the setup on a 4-hour chart. Use the moving average to guide our stop. Now, we can also take a look at other currency pairs like Kiwi CAD. What's the Kiwi CAD doing? So Kiwi CAD is again trying to get above that momentum. I mean, look at that channel that has been moving, back and forth under. So 82 is a good level of resistance. If you can break above that, it can catch a bid. But that's where we are with the Kiwi CAD. Let's take a look at the Aussie CAD for now. And Aussie CAD, as you can see that this has been in a downtrend and it's just trying to break above it. So this again still looks better by the dip sort of an opportunity. But for now, I think I do like EuroCAD the best out of all. Again, the relative strength will continue to evolve and change. The big question is, okay, what are the pairings to get the dollar CAD? The fact that dollar is actually doing much better. If you want the dollar on the long side, which again it's like I said, dollar's at a crossroad. But you can see, compared to relative strength weakness, dollar is doing better against the CAD. So which means CAD is the better short, not the dollar. So I would hold on to the dollar short and look elsewhere. So let's not pay too much attention to the dollar crosses right now because it is neither a buy, it's neither a sell. So that's a game plan. Again, keeping the powder dry. Like I said, next week is likely to be a big week. But for now, you can still follow relative strength weakness and have small wins here and there. Thanks for watching. We'll see you next update. Cheers.